Welcome to the CFD weekly overview of the global financial markets. Fears continue to mount over a trade war between the US and its major trading partners, primarily China and the EU. President Trump announced that many Chinese companies will be barred from investing in US tech to block technology exports to China. The US will announce restrictions on Chinese investment in the US by Friday. China said that it will not hesitate to retaliate. Donald Trump tweeted on Tuesday that it won't take long to impose tariffs on cars imported from the EU. The euro partially recovered last week after a steep decline in mid-June, following the ECB meeting. The British pound weakened last week, touching the 1.31 level at one point. The outcome of this week's EU summit may exert significant influence on the movement of the two biggest European currencies. The dollar extended losses against the Japanese yen, but stabilized at around 109.6. US stock prices continue to slump. On Monday, markets suffered their worst daily decline in more than 2 months, as investors assessed the impact of deteriorating global trade relations. Company stocks with operations in China or exporters to that country have been under particular pressure. Gold prices were in steep decline last week, hitting a 6-month low on Tuesday. The dollar moved higher, while fears of escalating trade tensions provided little support for the yellow metal. Bitcoin continued to hover slightly above $6,000, very close to this year's low touched in February. Oil prices increased last week. OPEC and non-OPEC producers agreed in Vienna on a modest increase in production starting next month. The increase would translate into a nominal output rise of up to 1 million barrels per day. Crude prices were also boosted by production losses in Canada, uncertainty over Libyan exports, and a slight slowdown in drilling activity in the US. You've been watching the CFD Weekly overview of the global financial markets.